Good morning, everybody. My name is Mardochee. I'm an accountant in the group, right? Tax preparation, tax planning, accounting, CFO work. So anything like finance related, keeping track of your numbers. That's what I do. Uh, Fun fact about me, I'm currently at Duke University. For people that didn't know, doing a CFO program. It's a grad program. Graduated in March. Appreciate that. Thank you, thank you, thank you, thank you. And I've been spending all year traveling the country, pretty much learning this big, beautiful bill. Went, New Orleans, Orlando, Austin, Texas. So a lot of changes. So if you have any questions specifically about yourself, I'm gonna do the best I can in 10 minutes. But this is a 900-page bill, right? I'm gonna do the best I can to go over what's for like general Americans, what affects general Americans. But again, if you have any specific questions about 2026, 2027, 2025, reach out because the big beautiful bill is pretty much a staged bill. It's like layered. So some changes happen in 25, some changes happen in 26, and some happen in 27. So I just want to let you know. All right, cool. So this executive order, right? So the executive order came out in March of last year. Okay, so essentially what that means is as of September 30th of 2025, they're no longer sending out paper checks, right? The government doesn't want to send out any paper checks. So if you file tax returns, this is typically for older people. So a lot of older people, sometimes they like to get paper checks. So what's going to happen is if you don't put your bank account information on your tax return, you're going to get a notice, and they're going to say, hey, please send us your banking information. So now if you don't send it after a certain amount of time, then they'll send you a paper check. But that's not what they really want to do. So that paper check would have came in 3 weeks, but if you wait for that paper check, it's going to come in like 6 months. Okay? So make sure you put your bank account information on there. All right? So the next thing you got to be mindful of that a lot of people forgot is they downsized last year. So they laid off about 75,000 people, a decrease in their workforce, okay, of 26%. So don't expect them to answer the phones and all that type of stuff. It's going to be very challenging to communicate with them. I highly suggest using easy services. So instead of calling, learn how to use your online e-services. So if you got to know how to do that, definitely reach out to your guy. I can do that for you. All right. And also I can represent you too. So me being an IRS enrolled agent, I can file a power of attorney on your behalf and get documents directly. So if you don't know how to use that. All right. So again, Big Beautiful Bill came out July 4th of 2025. Okay, it's a 900-page document, a lot of changes. Okay, one of the changes here is a 1099-DA. Okay, what a 1099-DA is, it's pretty much a document you get if you trade digital assets. Okay, so a lot of people, cryptocurrency in the last, 8 to 10 years or so is a big thing, right? And they haven't been able to regulate it, right? Because a lot of people that do this type of stuff, they say it's decentralized, and you can't determine how much you paid for it because it's decentralized. And pretty much when it comes to taxes, you got to know what you paid for it and what you sold it at, right? So now there's more transparency on what you paid for it. They're gonna issue these 1099 DAs. So if you're a person that trades crypto, sell it a lot, especially if you've done it in the last couple of years, if you get a 1099 DA, you may get audits in previous years if you're a person that highly been doing the last couple of years because it's been on the tax return since 2019. Do you trade virtual currencies? And most people just say no because they don't want to pay taxes. They think that, like I said, that decentralized, they can't determine. But now they're on to you, okay? Um, yeah. So yeah, absolutely. Cryptocurrency people, just be mindful, okay? Um, okay, no tax on tips, right? This is the big thing, political, whatever. Okay. It's a little yes, maybe. Okay. So it's max $25,000 per tax return, right? On tips. Okay. So it's not all tips, only tips up to 25,000, and it has to be a voluntary tip. So gratuity on like a on the thing, that's not, you still got to pay tax on that because you're forcing them to pay that. So it has to be a voluntary tip, okay? And it's phases out. So phase out means that once you make 150,000 or more as a single person, it starts to not count little by little, okay? Same thing for if you're married, okay? Married filing joint, 300,000. Once you hit that threshold, the tips start to not be taxable, okay? And this is only up to 2028, okay? It's only for 3 years, 25, 26, 27, 28. After that, it's done. But these guys are full of surprises, so don't be surprised if they just say they extend it, create some other crazy rule, whatever, right? So for now, it's through 2028. And this is federal taxes only. So you still have to pay state taxes and Social Security and Medicare. So it's only federal taxes that there's no taxes on. Okay. So there's nuances to it. Next, no tax on overtime. Okay, that's loaded, right? So if you get paid $10 an hour, right, time and a half is 15, right? So you don't get taxed on the premium. The premium is the $5. Okay, the difference, not the entire thing. So it's they just say that, but it's really the premium. Okay. Again, you have limitations. So 12,500 for a single person, 25,000 for a married filing joint. Okay. And again, similar to the tips, it's you still get taxed on Medicare and Social Security. You don't get taxed on the federal tax, but you still have to pay state tax if you're in a state that has state tax. Which we live in New Jersey, we know we have state tax. Okay, let's move on. Some other provisions here. Okay, I'm not gonna go over everything. I'm just gonna go over the important stuff. So QBI is an important deduction that was introduced 2018, I believe. So pretty much what that is qualified business income. You can take a deduction up 20% on your taxes, and that was set to expire in 2025. And a lot of people were like losing their minds, especially a lot of accountants. But they extended it. Okay, through 2028. I expect them to probably extend it again, but right now, that's the extension. Okay. Bonus depreciation. Bonus depreciation is if you buy something like a table, all right, which is a furniture and fixture, typically would have to divide. So you paid that. Let's say you pay $49 for that. You have to divide that by 7 years, and you take the $7 every single year. But bonus depreciation, you take 100%, 49, take this year. So this was actually supposed to be 60% in 2025, but it's now 100%, which is great. So a high income person, right? If you have a lot of, oh, what kind of deductions can I take? Okay, what did you buy? You can take the whole thing this year. So that's what 100% depreciation is. Okay, a 179 deduction you can take. They just increased that deduction. Okay, that is so for certain assets. If you want to know more, you could ask me later. Okay, I'm not gonna get into it because my time is probably running out. Energy credits. Okay, they were supposed to last until 2032, I believe. I think that was what it was supposed to be, but then now it's just gone. They just said no, out of nowhere. It's gone. And in 2025. Oh, I guess I'm done. Okay. I gotta do this. As a in New Jersey, right? Real estate. Okay. Before you can only take $10,000. So if you live in Livingston and you have $25,000 worth of property taxes, you can only take 10 before. Now you can take the whole thing. 40,000. Okay. Yeah, it's good. Good. New Jersey. Type it up. New Jersey. Homeowners. Come on, homeowners. Okay. 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 Last thing. Donald Trump accounts. Okay. He came out with this thing called Donald Trump accounts. Okay. So now these counts are pretty much for kids. Okay. Because everybody knows not every kid is like really great academically, all that stuff, right? But you still want to invest in their future, right? So what this allows you to do is you can still invest in school, right? But you can also use this fund for to start a business or buy a house. But the kid has to be 18 years old. Okay. So what this is the government's going to give a newborn kid born in 25 and 2026. Between 2025 and 2028, every newborn child can receive $1,000 deposit from the government. Okay, $1,000 from the government. Okay, opens this account. Parents can put up to $5,000 into the account annually. If you have a job willing to put in money, they can put in 2,500. So total will be 7,500 contribution, 5,000 from parents, 25 from the job, and every year, and is investing in the market. Okay, but the only problem, there's two things I don't like about this. The first thing is you have to open that account with the government. Okay, so they control the account. So even if the baby was born in 25, you can open an account for them, get the $1,000, but you can't do it. Nobody can open a Trump account now until July 4th of this year. Okay. So another thing I don't like about it is there's no rule on if the child dies. So if the child died before 18, God forbid, obviously. But you gotta. I don't know. There's no rule. There's no rule yet. So there's no rule. I don't know if they're gonna create a rule by the time 4th of July come. But well, I don't know. See, don't kill the messenger. I'm just CNN. All right. I'm just. You know what I mean.